Now, friends, we were into divisible profits. What are divisible profit? Those profit which are available for distribution of dividend. Correct now? Break my tea, coffee. Ah, sir, we are hungry now. That I know. Relax and study. Now, let's study rather. Now, friends, divisible profits, free reserves. These are those reserves which are available for distribution of dividend. Am I clear? Yes. Examples of these reserves are what? G, R, R, P. G is general reserve. G is general reserve. R is retained earnings. Revenue reserve or reserve fund. Dividend dividend equalization. Dividend equalization. Correct. And last is PL balance. So these are your divisible profits. GRRDP. GRRDP. Now chartered. Thereafter you have statutory reserves. Which reserves? Statutory reserves. Sir? Oh, sir. What are these statutory reserves? Statutory reserves are those reserves which are created for income tax purposes. Correct. In detail, we'll study later, but time being, you remember these are those reserves which are created because of income tax purposes. Reserves which are created income tax purpose. Income examples. Example chartered. Examples you have investment reserve or fund. Second is development rebate reserve. Thereafter, foreign project reserve, export profit reserve, site restoration fund. Ayyo Rama sir, so many are there. Restoration. These are your which reserves? Statutory reserves. And there are other reserves. So do we need to remember the breakup? Yes, divisible profits will require it not only in this chapter but so many chapters. Statutory reserves once again later we'll study, but that time again we'll write the names. But if you remember from starting that there are three types of reserve, it should be clear in your head that one is divisible profits which are available for distribution of dividend, one is statutory reserves. These reserves are created because of income tax requirement, and last but not least is other reserves. Other reserves. Am I clear charted? Yes or no? Yes. What are other reserves? Other reserves are capital reserve, then security premium, security premium, then chartered, evaluation, reserve, then capital, redemption, reserve, thereafter debenture, rebate, reserve, and thereafter ESOP reserve. Yo, Rama sir, what is ESOP reserve? Now you have promised your employees that you will give them equity shares. For that you have created reserve. For time being, you understand this one. You have promised your employees that you will give them equity shares in future. So you have created reserves today. This reserve say you will give them what in future? Equity shares. That is known as ESOP reserves. Am I clear? Remember, reserves can be negative also. Reserves can be negative also. Am I clear? So these are your reserves. Now, charted in reserves, one more point I would like to share. In reserves, I would like to share one more point. Which point? That we have to wait. Now, in surplus PL account, PL balance as under. balance of PL. Opening balance of PL matlab whatever profit we had earned till last year. Opening balance of PL means what? Opening balance of PL means whatever profit we had earned till last year. Add, add current year's PAT. Add current year's PAT. Uh, correct. Less interim dividend. Less transferred to reserves. Less interim dividend, less transfer to reserve. Transfer to reserve का मतलब from profit you have given dividend and something you have transferred it to reserves, and that transfer to reserve is generally calculated as percentage of PAT chartered. That transfer to reserve shall be generally calculated as percentage of PAT chartered. Am I clear? Now, thereafter, less fictitious asset written off. Less fictitious asset written off. Preliminary expenses, discount on issue of shares or debentures, which were not written off, shall be written off over here. Correct? Yes, sir. No, sir. Yes, sir. So in reserves and surplus. Now, one more very, very important part in reserves and surplus chart. One more very, very important part. That is opening balance plus PAT minus distribution is equal to closing balance. Correct? Opening balance plus PAT minus distribution is equal to closing balance. Or we can say that opening balance plus opening balance plus PAT minus closing balance is equal to distribution. Correct? Now, charted on this basis, there is one question that we'll do later on. Opening balance plus PAT minus distribution is equal to closing balance. Is this clear? Yes or no? Yes, sir. Now, check. Then, another point. If question states dividend declared or proposed by the company dividend declared or proposed by the company chartered, this adjustment should be completely ignored. Kaiku sir, why to ignore such statement? 1 minute. Why to ignore this statement? Please ignore such adjustment. Why? Since this transaction is after year end. After year end and after approval of financial statements by board of directors. Sir, oh sir, what does this mean, sir? Suppose chartered, this is your year. Don't go with this. Your year starts on 1490. 1490 ko your year started, 31st March 90 ko your year ended. 31st March 91 ko your year ended. So this is your 1991. Now 1991 ka profit earliest you can find out is on the next day. Because otherwise though there will be few days by the time which all the transactions would be recorded, then audit would take place, then again new finalization, then after audit if there are mistakes that would be rectified, and then the statement would be approved by board of directors. Correct. So during this period we come to know profits. So during this period we come to know profits, board of directors will propose dividend over year. Yes. If board of directors propose dividend over year, shall we include that declaration of dividend in financial statement of 90 and 91? No. So dividend of 1991 will be declared and proposed in 91-92. So dividend of 1991 is declared or proposed in 91-92. Shall we show that dividend in 1991 ka financial statements? No, chat. That is why dividend declared or proposed is given in the sum, you are supposed to ignore it. Am I clear? Yes, no, yes. Now that. Thereafter, now, this is your reserves and surplus. Reserves and surplus all details we have done. Third point is what in balance sheet charter? Do you remember? Received. Number one, number two. Refer. Money received. Money received against share warrants. Now chartered. What is money received against share warrants? चलो एक बात करते हैं. Listen, chartered. Suppose I have a company and company was doing well, and suddenly I am into coaching center only. Correct? I'm running a coaching center which is doing wonderful. Now I have a competitor in Bangalore only. तो बैंगलोर के कंपटीटर को आई वांट टू बाय. He is ready to sell and I am ready to buy. Now, chartered, in order to buy that competitor, I require money. Correct. So I went to my shareholders and told that this is an option available. Shareholders told, nice option. Must buy Dipesh. I thought of buying, so we decided a price. After deciding the price, I told shareholders, board of directors meeting and shareholders, I told that I require 10 crore rupees to buy that organization. Very good buy. 10 crores I don't have. Oh, then बोला I got a plan. बोला what? बोला 10 crores का share capital I use. Fresh issue of share capital, I get the money and buy the company. बोला Dipesh, if you make a fresh issue of shares, no, then they will become shareholders. Well, obviously, if I make a fresh issue of shares, they will become shareholders. No. Well, that means our stake will reduce. No. Ownership will get diluted. No. So we will not pass this agreement of letting you make fresh issue of shares. But otherwise, from where will I get money? Like Dipesh, there are some shares now. Plus, you make a fresh issue of shares, so you get money. Plus, you will give some shares to the directors of that company which you are buying. So there will be too much of dilution of shares, too much of dilution of ownership, and we don't want this. So we will not let you issue the shares. Bola, okay, share capital dropped. Let me go out with make a fresh issue of debentures. Paisa, money. They told no fresh issue of debentures also. And Swami, if you don't allow fresh issue of shares also, fresh issue of debentures also, then from where will I get money? Well, that is your lookout, but will not allow fresh issue of debentures also. Well, why? Well, fresh issue of debentures mean, fresh issue of debentures mean there is a fixed interest burden on the company. Company will become a levered company. Fixed interest cost will come, and we don't want such risk in future. You want to buy the company. Well, yes, that is a good option. Buy the company. Buying the company, I require money. Money I cannot raise by share capital also, by debenture also. Then how do I raise money? Well, your tension. I came out, thought, and came out with a plan. I told this. I came out with a contract. I came out with a contract. Suppose the market price of the share is 150 today. My company ka market, don't copy this. Market price of the share is 150 today. Correct? Contract market price of the share is 150. Understood? Yes. So I created a contract where I said, you give me 25 rupees today. You give me 25 rupees today. After 2 years, I will give you equity shares at 125. So they are saying 25 I give, they give now, and 125 later. So ultimately, they are paying me how much? 150. What is the market price of the share? 150 only. Correct. So don't you think after 2 years they will get shares at price before 2 years wala? If I give them offer on 1190, if you give me 25 today, market value of equity shares on 1190 is 150. Then on 1192, they will have to pay me 125. That means they are paying 125, 25 earlier. That means started they are paying me how much? 150. 150. What was the price of the share on 1190? 150. But they are paying me 150 on which date? 1192. Don't you think on 1192 they are getting shares at a price which was there on 1191, 1190? Yes or no? They are getting shares on 1192 at a price of 1190 ka shares? Yes or no? Yes, sir. So I thought people will come. Correct. But now I'll get how much? Only 25 rupees. Later on, I'll get how much? 125 rupees. Correct, incorrect. Correct. Now, chartered, there are two possibilities. Some people might feel that after 2 years, price of the shares will go above 150. So this is a good deal. Some people might feel God knows if the price of the shares falls after 2 years, then this is not a good deal. So there would be both the kinds of people in the market. Some who believe good deal, some who do not believe good deal. Those who believe in good deal will sign this contract and give me 25. And after 3 years, if the price of the shares is above 150, then they will give me remaining 125 and buy the shares. If the price of the shares is below 150, then they will think 25 rupees gone, lost. It's a risk. Am I clear? Yes or no? So today I come out with a contract that today you give me 25 rupees. I will give you shares after 2 years at 125 rupees. That means after 2 years, you are supposed to pay me 125 and I will give you one equity share. Am I clear? So if I give you offer on 1190 ko market price of the share is how much? 150. You come to me on 1192 and you have to pay me how much? 125 to get the shares. Now that means on 1192 you are getting the shares at a price which was prevailing on 1190. Yes or no? So 2 years old price you are getting. You might think 2 years with the price will go where and all. So you grab this offer. Yes or no? Yes, sir. So chartered. Simple Bhasha. Again, I tell you, I sign contract with you. Sign, I sign contract with you. On which date? 1190. As per that contract, you are supposed to give me how much? 25 rupees. And after 2 years, you will get shares at 125. So total share will cost you how much? 150. But after 2 years, if you don't buy the shares, will I refund you 25? Nah, nah, nah. That 25 I will not refund. It is your risk. If you want, you can buy. If you don't want, don't buy. Correct? So then nobody will buy. No. There are people who will think that the price of the shares will rise and this is a good deal. So they will buy. There are people who will think that this is not a good deal because the price of the shares will fall. They will not buy. Am I clear? Yes, sir. This contract, which allows me to get 25 rupees today against shares in future, this is known as share warrant. Am I clear? So when I get 25 rupees today, no, I pass the entry bank to share warrant. 120, sorry, 25, 25. Face value of the share is 10 rupees. After 2 years chartered. After 2 years, two possibility. The price of the share is much above 150. So you will come and buy the shares. So you will give me how much? Sir, I will give you 125. Share warrant 25. So ultimately, as a company, I got how much? 150. What is the face value of the share? What is the face value of the share? 10 rupees. So what is security premium? 140. So 10 rupees का face value में I got how much? 10 rupees का face value में chartered I got how much? 150. 25 2 years ago and 125 today. By total I got 150 only, no? 25 you gave me on 1190 and 1192 ko you are giving me how much? 125. So total you are giving me how much? 150. Against that 150, I am giving you equity share whose face value is how much? 10 rupees. Therefore, remaining 140 will go where? Security premium. But after 2 years, price of the share in the market has become 90 rupees. After 2 years, price of the shares in the market has become 90 rupees chartered. Then will you buy this? No. Then kya karega? You'll say Tata, forget it. Then the share warrant ka 25 rupees is my gain. I don't have to give it to you back. But today, when I get this 25 rupees, against this 25 rupees, do I have an obligation? Yes. What is the obligation? Obligation is to give share or obligation is to give money. So obligation is to give share. That is why I show it under shareholders fund. Oh, beautiful, sir. Against this 25 rupees, do I have an obligation? Yes. What is the obligation? Obligation is to give cash or obligation is to give share. Sir, obligation is to give share. Obligation is to give shares. That's why I show it under shareholders fund. अच्छा, sir, whatever you did just now, uska one example we should do, no? Absolutely charted. We should do one example. But share holders fund is the lengthiest part. Rest balance with the fatafat. Share warrant. share warrant. Now, now charted. Suppose X X Limited says give me rupees 5 today, then I will give you equity shares, equity shares, rupees 25 after 3 years. So you give me 5 rupees today. After 3 years, I will give you shares at 25. So total price of the share in the hands of the shareholder will be how much? 30 rupees. 5 rupees they are giving today, and after 3 years they will give how much? 25. So share warrant ka advantage. I will get 10 crores. And that money I can use it to buy another company. And in future I will issue shares. Okay. And future again I get money. Correct, correct, correct. So today my shareholders are not letting me dilute. So today I issue share warrants, get the money, wait for some time, and then dilute. Sex Limited says give me rupees 5 today and I will give you equity shares at rupees 25 after 3 years. So you are giving me how much today? 5. And after 3 years you will give me how much? And after 3 years you will give me how much? 25. So total price of the share for you after 3 years will be how much? बोलो ना 30 rupees. Correct. So today, what entry will I pass? Today you will pass the entry bank to share warrant 5 5. Correct. Then chartered after 3 years. Market price is greater than rupees 30. If market price is greater than rupees 30, tell me, smart chartered accountant, show it to the world that you are the brightest child. Tell me if the market price is more than 30 rupees, will you buy the share? Because you had paid 25 earlier. Sorry, 5 rupees earlier. Now you have to pay 25 to get the shares. And the market price today is more than 30. Will you buy the shares? You will not buy the shares. Because, sir, I will buy the shares from the company. 5 I paid earlier, 25 I pay now. So total I am paying how much? 30 rupees. 5 I paid earlier, 25 I am paying now. Total how much I am paying? 30. Market price is more than 30. So if I buy at 30, sell it tomorrow only, then also I'll make profit. Correct, incorrect? Correct. So what will be the journal? What journal entry will the company pass? Company will pass the journal entry, bank account debit. How much? 25 share warrant account debit 5. So how much company got? 30. Against the 30, what is the face value of equity share? Equity share capital ka face value is 10. The remaining will go where? Remaining will go where? So remaining will go security premium. Remaining will go to security premium because face value of equity share is 30. But charted if the market price of the equity share is less than rupees 30, will you exercise the option or you will not exercise the option? Sir, exercise the option matlab exercise the option means you pay 25 rupees and get the shares. Exercise the option means you pay 25 rupees and get the shares. Not exercise the option matlab you say, chuck it, 5 rupees gone, I don't want to buy. So market price of the share is less than 30. Will you buy the share? You will not buy the share. Sir, I will not buy the share because 5 I have given earlier, 25 I give now. So cost of share to me is 30 rupees. Then market price is less than 30. Sir, if market price is less than 30 and I buy at more than 30, don't you think my screw is little ढीला? I will not do this, or I will not buy. If you don't buy, no, you have to forego 5 rupees. No problem, sir. I am ready to forego that 5 rupees. Correct. The company will get this share warrant to PL. If this is gain for the company. Correct. So you understood what is share warrant? Yes or no? Yes, sir. You'll have written. Yes, sir. Shall I move ahead? Yes, sir. Now, number two. Share application received share application money received pending allotment. Now, tell me, you remember your childhood? Yes. Childhood may you used to pass the entry company issue of shares. Issue of shares in installment application allotment call. Yes or no? Yes. The first entry you used to pass it what? Bank to share application. Yes. Second entry used to pass a share application to bank to equity share capital. Forget bank also. To equity share capital. Third, used to pass share allotment to share capital. Fourth, bank to share allotment. There can be cautionary. I am not going into complexities. Let it keep it simple. So first entry is bank to share application. Second entry share application to equity share capital. Third entry share allotment to equity share capital. Fourth entry bank to share allotment. Correct, chat. Tell me one simple thing. Do you know the meaning of allotment of shares? Yes, sir. When the shares are given to the shareholders, that means shares are allotted. When you give anything to the shareholder, when you give the shares to the shareholders, that giving of the shares to shareholders is nothing but allotment of shares. The plot has been allotted. That means you have got the plot. Are you understanding? Your job is allotted. That means you have got the job. Shares are allotted. That means you have got the shares. Correct? Can you tell me in which entry shares are allotted? Sir, बोलो. Sir, third entry में shares are allotted. Ayyo Swami. Now listen very carefully. Everybody, mostly, generally, people believe that third entry में shares are allotted because allotment. Because 12th में madam what they thought? Receive application, then transfer application to capital, then allotment due, then allotment receive, then allotment due, then allotment receipt. Correct? This is how you studied. Yes, sir. Application money received, transfer it to share capital. Yes or no? Yes. Now let's assume we are here. Only first and second entry is there. After second entry, year end is there. There is a year end. Say suppose I have passed the amount 100. Because after these two entries, share application will get nullified. Yes. Where will bank come? The bank will go in current asset, cash and cash equivalent. You will add 100 rupees to the bank. So 100 rupees will go to bank in current assets, cash and cash equivalent. 100 rupees you will add to bank balance, correct? And this, sir, 100 rupees will become share capital. So balance sheet may you will show share capital 100. Yes or no? Yes, sir. Now remember this thing. Keep it in one side of your brain. Okay? Sir. Now let's go to another situation. Suppose if I tell you the first journal entry which you learned in your life. First journal entry which you learned in your life was cash to capital. So balance sheet mein there is cash there is capital. Now, tell me, chartered, think and answer. Okay. Tell me, chartered, if somebody tells you cash to capital is the journal entry, correct? Then he asks you, does the organization have owner? Does not have the owner? What will you say? It does have the owner. Otherwise, from where will you get the capital? The person who contributed capital is the owner. So that means behind this capital, there is an owner. Balance sheet mein you can see the owner or you can see the capital. Balance sheet mein I can see capital. But behind capital, there is an owner. Behind capital chartered, there is a owner. Are you understanding? Yes, sir. Similarly, if I tell you there is equity share capital and there is no equity shareholder, will you believe that? No, sir. If there is an equity share capital, obviously there will be equity shareholder who has the equity shares. Exactly. If there is equity share capital in the balance sheet chartered, if there is equity share capital in the balance sheet, there has to be equity shareholder. Without equity shareholder, you cannot have equity share capital. So if there is equity share capital over here, there will be equity shares holder. Can I now listen to this? This sounds very funny. Can I tell you there are equity shareholders without equity shares? So what dumb thing you are saying? You are equity shareholder, but you do not have equity shares. This is equity share. Dipesh is the equity shareholder, but does Dipesh have equity shares? No. Is that practically possible? No, chartered. So equity shareholders will have equity shares, will not have equity shares. So obviously, equity shareholder will have equity shares. Exactly. Equity shareholders will have equity shares. Equity shareholders will have equity shares. That means company has given them shares. Yes. If company has given them shares, that means shares are allotted to them. That means in this entry, equity share capital will come in balance sheet. If it comes in balance sheet, there has to be equity shareholder. If there's an equity shareholder, he has already got equity shares. That means shares are allotted or not allotted? Allotted. That means, beta, this is the application money received and shares are allotted. In second entry, to confirm allotment, we ask allotment. We receive allotment. To confirm allotment, we ask allotment money and we receive allotment. Confirm that the shares are getting allotted. You want to continue? Yes, then pay allotment money. Okay. Now understand. One more thing. You have always read X Limited issued 10,000 shares. Public subscribed. Public subscribed for 12,000 shares. Excess application money was rejected. And balance shareholders were allotted full shares. So in first entry, you used to pass bank to share application 12 rupees, 12 rupees. Second entry may you used to pass share application 12 rupees. Yes. Excess is how much? 2 rupees that you refund and remaining ko you allot shares. So excess ko you refund in the second entry. Remaining ko you allot the shares in the second entry. So share allotment takes place in the first entry, second entry, second entry. This much is clear? Yes or no? Yes. Now chartered C. First entry I passed bank to share application, yes or no? Yes. That means first entry may bank to share application, I have received application money? Yes. Second entry may I will pass allotment entry, that is share application to equity share capital, yes or no? Yes. Share application to equity share capital, yes. Now chartered. Or if there is excess, I will refund. Yes. Again, I repeat, application money received, yes. Shares are allotted over here, yes. Application money received, yes. Shares are allotted over here, yes. Here is the year end chartered. यहाँ पर year end. So in year end, what will you say? Share application money is received, yes. Are the shares allotted? No. Is application money received on year end? Yes. Are the shares allotted? No. That means, can I say share application money received pending allotment? Yes. Share application money pending allotment. This share application money pending allotment. So what you are supposed to give? Share application is your liability, is your obligation. Yes. Against this obligation, what you are supposed to give? Sir, share capital. No. Maybe. May not be. Because the second entry is bank to share application. Second entry share application to bank to equity share capital. So some को you are supposed to, some को chartered you are supposed to give equity shares and some को you are supposed to refund. This is your liability and this is your equity because we are supposed to give them equity shares. So now I hope you understood bank to share application. To share application means share application money received pending allotment. Correct? Now listen. अभी एक एग्जांपल करते हैं इसका जर्नल एंट्री के साथ with journal entries so you will understand. Number 4, X Limited issued X Limited issued 10,000 equity shares of rupees. X Limited issued 10,000 equity shares of rupees 10 each on 25th of March 1990. Sir, 1990. My all examples में 1990 will be there. I'm in love with the year 1990. Sir, you got married in the year 1990. No, Swami. I was also a kid. I will study 1990 का historic importance later on. On 25th of March 1990, public subscribed for 1,000 shares. 29th March X Limited allotted 10,000 shares 10,000 shares and refunded excess application money on 2,000 shares. Correct, chartered? Yes. Excess application money on 2,000 shares on 4th April 1990. My question is, X Limited issued 10,000 shares of rupees 10 each on 25th of March and the public subscribed for 12,000 shares on 29th March. When did the company receive money? The company received money on 29th of March. Exactly. So 29th of March. 29th of March 1990. What entry shall we pass? Sir, we shall pass bank to share application. We shall pass the journal entry bank to share application. How much? 12,000 shares per we have received 10 rupees. 12,000 shares per we have received 10 rupees. So 12,000 into 10 is how much? 1,20,000. 1,20,000? Yes. Now started. Next entry, we allotted them the shares on which date? 4th. So 4th, so what entry we will pass? 4th April 1990. 4th April को we will pass share application 1,20,000. Bank. We issued how many shares? Sir, we issued 10,000 shares. Public subscribed for how many shares? Sir, 12,000. So excess was how many shares? Sir, excess was 2,000 shares. So 2,000 into 10, it is 20,000 we will refund? Yes. And rest ko will allot shares. Equity share capital 1 lakh. To equity share capital 1 lakh. You understood? Yes or no? Yes, sir. 29th March 1990 bank to share application. Share application to bank to equity share capital. Correct. Now, charter, tell me on 31st of March, when I'm preparing balance sheet, this 1,20,000 will go where? This will go in cash and cash equivalent, that is cash and bank. This 1,20,000 bank wala figure 1,20,000 chartered. This 1,20,000 will go in cash and cash equivalent. Correct, incorrect, correct. Now chartered, tell me where will this 120 go? So this 120 will go share application money received pending allotment. Now tell me honestly, entire 120 ko are you going to allot shares? No. Sir, out of 120, 1 lakh ko I am going to allot shares, 20 ko I am not going to allot shares. Exactly. That's what I am saying. This 1,20,000 ko two parts mein let's break it. First is rupees 1 lakh, to whom we are going to allot shares. And remaining is 20,000 which we are going to refund. Am I clear? This will come as share application money received pending allotment. Correct? And remaining 20,000 will come as other current liability. Remaining 20,000 will come as other current liability because that is refundable. Am I clear? Yes, sir. So now I hope all the four items of shareholders fund is now very clear. Share capital, bonus share, non-cash consideration issued, subscribed. That share capital is cleared. First of all, we started with the word equity. Equity is not liability. With that, we started. Then we understood share capital. Then we understood reserves and surplus. Then we understood presentation of reserves and surplus. Then we understood share received, money received against share warrants. Then we understood share application money received pending allotment. This was your shareholders fund chart. Next will be what? So next item will be non-current liability. Non-current liability. thereafter chartered non-current liability में what will come? Understand. A long long-term borrowings means any borrowings whose any payment which we are supposed to make after 12 months. Again, non-current liability, long-term borrowing means we have taken money which we are supposed to return. It is loan basically. We'll discuss everything in detail. Don't worry. B. Long-term borrowings, then deferred deferred tax liability, then other long-term liability. Last is long-term provision. This will become easy for you to remember. Can you see the red words? Yes, borrowings, deferred, others, provision. Borrowings, deferred, others, provision. I will explain every item. But Abhi, remember this. After I finish the format, every item I will explain. Borrowings, deferred, other than provision. Can I say its short form is PDOP? Borrowings, deferred tax, other than provision. Rest everywhere it is long term, long term, long term, long term. Borrowings, long term borrowings, deferred tax liability, other long term provision, long term provision. So, rest everything is long term only, chat. Rest everything is long term only. See, long term, long term, long term. What you are supposed to remember? B dop. B dop. Borrowings, deferred, others, provision. Am I clear? Yes. Now, long-term borrowings means non-current liability means sir, those liabilities which are payable for after 12 months. That means liability which is for more than 12 months. Correct? Yes. You will calculate 12 months from where? We will discuss little later on. Now charted number 3, 4. Current current liability. Current liability में we have A short term borrowings, then B, trade, payable, C, the current liability, D, D chartered, short term, short term provision. Now chartered again, you see it is BTOP, borrowing state payables other than provision. But this is current, therefore this will become short term. So I hope your liability side is clear. Liability side में 444 share capital, reserve, share warrant, share application. BDOP. The first is share capital, reserve, share warrant, share application. SRSA, BDOP, and BTOP. BDOP, BTOP. So how will you say 444 share capital, reserves, share warrant, share application? Correct. Borrowings, deferred, others provision, all long term. Borrowings, trade payable, others provision, all short term. Correcta, incorrecta, correcta chat. Now, now, started. Your liability side. Well, let me finish the format of asset. Then I go into the depth of every item. Correct? ठीक है sir, no problem. Then charted we land up in assets. Assets. Assets when charted, first you have got non-current asset. Non-current asset, basically you mean asset which are for more than 12 months, current assets, assets which are less than 12 months. No beta, ऐसा नहीं है. Let me first finish the format. We'll rip apart every item I can guarantee. Non-current asset. Non-current asset में A, PPE, property, plant and equipment, PPE, and plant and equipment and intangible asset. Property, plant and equipment and intangible assets. In that number one, PPE. Number tangible. Number three, capital. Capital WIP means capital work in progress. Capital work in progress means building under construction. Building under construction chartered. Am I clear? Yes, sir. Number four, बोलो बोलो नंबर फोर. Number four is what? Intangibles. Intangibles under development. Correct? PP, intangibles, capital work in progress, intangibles under development, matlab software in making. You are preparing a software, 1 year is over and it's still not ready to use. Don't write anything. I told you I will make you write, understand, rip apart every item which you are seeing over here. Those items which are tricky. Sir, deferred tax you did not tell. That will study in AS 22. So I did not speak too much about it. Rather, I did not speak anything about it. That we study in a separate standard only. Am I clear? Yes. B. PP, you know, fixed assets which are tangible, intangible, everybody knows. Goodwill, patents, copyright, brand name, software, over. B. Non current, non current investments. Then deferred, deferred tax asset. Then deferred tax asset. Long term loans and advances. Long term loans and advances. Current asset. Now charted in this PPE and intangibles, investment, deferred, loans and advances, others. PIDLO. Correct. Investment, deferred, loans and advances and others. Investment, deferred, loans and advances and others. PIDLO. Over there it was share capital, reserves, share warrant, share application, then BDOP, BTOP. Correct. And assets में non-current assets में PIDLO. PPE, investment, deferred, loans, others. Number two, sir, sir, we'll write which items will come where, no? Yes, we will write chartered. Don't worry. Current assets में we have got current investments, current investments. Sir, current investment मतलब short term investment. Yes. That means the holding period is less than 12 months. Yeah, for time being, you can remember all this. But wait, B. Inventories. In inventories. Then trade receivables. Trade receivable. Cash and cash equivalent chartered. So what is cash and cash bank FD less than 12 months, cash bank FD less than 12 months. So relax. We'll write. Yes. First, let us list the format. F short term loans. Hey, loans and advances. Short term loans and advances. The current, other current assets. Now charted current asset में क्या I investments inventory trade receivables cash and cash equivalent loans and advances and others. That is IITC loan. IITC loan. IITC loan. Bid low. B top. B top. Correct chartered? Yes or no? Yes sir. समझा के नहीं? Yes sir. Now chartered. If you can understand. So balance sheet में there is the short form. Now a patent question. We have divided assets and liabilities. We did, don't copy, equity plus liability is equal to asset. Till now we have understood equity ka every element. It is share capital, reserves, share warrant and share application. Correct? Liabilities could be divided between non-current, current. Assets could be divided between current, non-current and current. Liabilities also current and non-current. Asset also current and non-current. Was balance sheet always like this? No. This balance sheet का format came in 2012. Revised Schedule 6 में आया था. This format came into Companies Act in Revised Schedule 6 in 2012. And before that, it had come internationally. Let's not go internationally. When did it come? But it had come before 2012 in international. In Companies Act 2013, it became Schedule 3. But this Schedule 3 was there in Companies Act 1956 as revised Schedule 6 chart. Am I clear? My doubt is, why did we do this? Was before wala balance sheet also current and non-current? No. Before wala balance sheet had a different format. I told you, no, why do we prepare balance sheet? We prepare balance sheet for these people. So we wanted a format which becomes, we keep on evolving with the formats which becomes easier for them to understand. Correct. Let me tell you a last small story before we end this today's session. Am I clear? हाँ बोलो sir. I've got two friends. One is Rita, one is Sonia Chat. One is Rita, one is Sonia. Rita has 5,000 in his purse now. Correct. Cash she has now 5,000. Whereas Sonia has 5 lakhs now. But Rita ka house is 2 BHK and Maruti 800 car. Sonia ka house, sorry, this is Sonia ka house is 2 BHK and Maruti 800 car. Rita ka house is 5 BHK bungalow, owned land per. Plus she is driving BMW. So Rita has 5,000 cash. Rita has 5,000 cash, but Sonia has 5 lakhs. Rita has 5 BHK bungalow and BMW, and Sonia has 2 BHK and Maruti 800. Now, Charter, tell me today I want to party. Today I want money to blow. Party करनी है. With whom I should go? One student said, Sir, Inky Pinky Ponky, father had a donkey. Sir, whomever you like, whoever is more prettier. In Swami. Think from your common sense. Today I want to go party paisa. Both are very pretty looking. Sir, then you should go with Sonia. Why? So Sonia has a lot of money today to spend. Exactly. But Chartered, if I tell you I want to get married and get settled, who is a better option? Sir, Rita. Exactly. So Chartered, if you are looking at long-term liquidity position, you're looking at cash and cash equivalent. But if you are looking at long-term solvency position, you're looking at property. Yes or no? Similarly, Chartered, whenever you are looking at a business, if you are looking at liquidity, then you're looking at cash and cash equivalent, which can be converted into cash. And we are looking at long-term solvency position, you're looking at property and debt against property. Yes or no? That is why all assets and liabilities were divided into non-current and current. So current helps us to find out its short-term liquidity position. And non-current helps us to find out long-term solvency position. That means when you're looking, first thing you decide in short term whether it will be able to survive or not survive to its liquidity position. And then charted you decide long term may it will be able to survive or not survive looking at its long term solvency position. So current helps us to find out its short term durability. Non-current helps us to find out its long term durability. Am I clear? But one line did you understood? I said if you're looking at short term, if you are looking at short term, you will you are looking at liquidity position. That means you are looking at any asset or liability which can be converted into cash. Yes or no? That means started. Is it 12 months or conversion more important? Current asset are those assets which will get converted into cash within 12 months or which will get converted into cash. Fundamental principle. Inventory, even if it gets converted into cash after 5 years, it is current asset only. Oh, yes. So, and some asset which are less than 1 month, which are less than 12 months, but it will not get converted into cash. Will it come in current asset? No. It will come in non-current. So get this thing very clear. Why do we have current and non-current? Liquidity and for solvency. So for liquidity, I want every asset and liability to get converted into cash. Yes. So any asset which is short term, less than 12 months, but it will not get converted into cash. Will I put it under current asset? No, I will still put it under non-current asset. For example, deferred tax. If deferred tax is less than 12 months also, no beta, it will always come in non-current. Why? Because it can never be converted into cash. Oh, so always don't remember greater than 12 months, less than 12 months. Are you understanding? And greater than 12 months and less than 12 months may also better. There is a catch. So I wanted to end this session today by saying that why do we have current and non-current? Because of solvency and liquidity position. That means every current asset and current liability should get converted into cash. So even if there's a long-term asset which will get converted into cash only, our intention is to convert into cash. It will become current. And any short-term which will never get converted into cash will become long-term. Am I clear? So long-term and short-term is not period-based only. It's based on liquidity and solvency. And period-based may also there is a catch chartered. And what catch is there in the period-based chartered, that we'll see in the next session. Thank you so much for a wonderful time today. Hope to see you tomorrow with the same chapter and we'll move ahead. Thank you so much. Take care. Thank you. Good night. Wonderful.